clearly visible and functional during the phone's initial setup and no functionality be hidden or disabled. Moreover, existing smartphones will receive the app as part of any future firmware update. Now, phone makers have been given 90 days to comply and 120 days to file their compliance reports. For new phones already on shop shelves, the app again will be pushed through software updates. Now, well, Sanchar Saathi isn't exactly new, but this mandatory pre-installation and future installation sure seems to be a new feature. Now, perhaps the government was indeed future ready 2 years ago when the Sanchar Saathi app initiative was launched first as a portal. So this is how the Sanchar Saathi portal began in May 2023. The original Sanchar Saathi portal allowed users to voluntarily, and that's the important word here, voluntarily report and block lost phones and malicious links. It also showed how many mobile connections were registered to a user and verified trusted bank contact details. According to the government, the new app now will simplify the fraud reporting, removing the need to visit the website. And users can report fraud without remembering their IMEI numbers as the portal is advanced enough to fetch it. The app offers services like checking connections in your name, verifying device authenticity, and flagging spam or suspicious calls. It also lets users report international calls spoofed with Indian numbers without needing OTP verification. According to data, over 42.14 lakh phones have been blocked and 26.11 lakh lost or stolen devices have been traced under the initiative since it began in May 2023. The Sanchar Saathi portal, not the app, but the Sanchar Saathi portal has received 288 lakh requests for checking mobile connections, resolving more than 254 lakh so far. Now, coming to the app, that too apparently has over 1.14 crore registrations with 1 crore plus downloads on Google Play and 9.5 lakh plus downloads on the Apple iOS App Store. But there are concerns, and some very big concerns at that. First up, if Sanchar Saathi comes pre-installed and can't be removed, does it become a government tracker? Nikhil Pahwa, founder of MediaNama, asked on X, what stops this app from leading to other mandatory apps like a digital ID app, a Digi Yatra, a VPN blocker, or even something that reads your messages? Once the government gets access deep inside the phone system, it may never roll it back. Next important question, is this an invasion of personal space? Our phones hold private chats and sensitive information. How can we be sure that the app won't access files or messages now or through a future update of the app? This raises serious privacy concerns. Next up, did the government exempt itself from data protection for a reason? The data protection law makes private companies more accountable, but the government faces fewer restrictions. This situation seems to show why the government may have planned the DPDP in that manner. And is this just more unwanted apps being forced on us? Phones already come with unwanted apps. Now the government is adding its own. Earlier, buying a phone with bloatware was indeed your choice. This time, it isn't. Now, was there a public consultation? The DOT simply seems to have issued an order without asking people or explaining its purpose. If it goes unchecked, will more such actions follow? So the big question on the show today really is Sanchar Saathi indeed a friendly government initiative to prevent frauds and strengthen cybersecurity as the order claims it would? Or is it something more sinister where the Saathi is in fact a snitch, a snooping app? Nikhil Pahwa, founder and editor MediaNama, joins me today along with Kanishk, cybersecurity expert and CEO of India Future Foundation. To you first, Nikhil, pertinent questions that you raised on X last night, and as I was reading through them, it seems fairly important to note that the app comes pre-installed. Right now, the government claims that this is to prevent fraud and to enhance cybersecurity. But what if some of the concerns that you raised that the government uses this device to snoop into your phone and read your messages, look at your private files or your private photographs? How does one prevent that?
Yeah, Karthik, essentially the app gets installed on the OS layer, and pre-installed apps usually have much stronger binding with the device, and the government is clearly directed that you cannot uninstall it. So even if it's saying that, like many apps you pre-install and you can remove it if you want, they're saying you shouldn't be able to disable it, you shouldn't be able to install it. So it is a perpetual occupation of your personal device, of your personal space. I can today disable many apps that I want. I can find an OS that doesn't have that doesn't require Gmail to sign in and install that if I want. There are options available. We have choice. This is a removal of choice and an invasion into our personal space. And this Sanchar Saathi is not something that we will use every single day. It's only when the device gets lost, right? And so you may need it when your phone is lost. You can log onto the website and do it also, but you don't necessarily need it on a daily basis. The government is forcing it on you. It does not prevent social engineering and the kind of scams that we are seeing, the digital arrest scams that we are seeing. So it doesn't really prevent fraud over there. An app on your phone cannot do that. It's about your own consciousness of what's going on around you. So these are all measures that will not solve the problem for us, but open a gateway to government getting access to our devices and potentially, right now, for example, they have a tool called Chakshu, which can be used to report messages and frauds, and that can have perpetual sort of scanning of your messages and calls, and flag what is problematic if someone's calling you or someone's messaging you. That itself, if it is enabled by default, will then give people access to all your messages. Right. The other thing is all this data gets stored with the government if it goes there, right? In which case, all your IMEI data, your and your mobile number, and it starts getting linked.
Right.
And the Sanchar Saathi database itself becomes a honeypot. Someone, even to gain access to your devices, just has to compromise the Sanchar Saathi app.
Right.
And so it makes you more vulnerable because this will be on every single Indian phone's device, every single Indian user's device.
Yeah.
And so it's an easy way to access everybody's phone, more liable to get hacked, more liable to be compromised. And come on, tell me the last time the government actually made an app that didn't have vulnerabilities.
Absolutely. I mean, look at the EPFO website. Look at, all the other, apps and websites that the government has initiated. There have been glitches and those glitches have been reported. But Kanishk, jump in here and help us understand a lot of questions being raised here by Nikhil and some very important ones. Number one, the chances of your phone now getting hacked, your IMEI number now getting hacked increase because now everybody who's out there with malicious intent knows that this app is available on every single user's device, number one. Number two, if you already had a portal, the same Sanchar Saathi portal and also the Chakshu portal to report fraud or to report or to verify where your IMEI etc. is being used, which are the devices registered to your phone, do you need an app 24/7 in your phone, resident in your phone, not just eating into space and memory, but also pretty much potentially looking at everything that your phone is doing?
See, government's initiative is basically trying to curb digital arrest cases or the number of, phones or the number of SIMs which are moving out of the country. So track them down, because a lot of times for digital arrest, you have SIMs which are moving out of the country. The moment they are put inside a phone, the government will be able to track all of those kind of activity. But doing this in the current manner and form of imposing something without public consultation or not looking at alternate methods does not solve for the issue. It exposes a Pandora's box, because this same data which is collected could be used to hack into people's personal lives, their spaces, and could also be used for tracking their identity. While government at one point of time is trying to bring in the data protection law, creating this new database would have another significant data fiduciary. And how government is looking at safeguarding this data? Would there be proper red teaming, pen testing, or security procedure being followed to maintain proper encryption and control for this Chakshu app and for the for the database
Right.
is a big question mark right now.
But
There
just
were
to
questions.
just to raise some more questions on the points that you're raising, and Nikhil, I'll request you to jump in here. Now, the fact that if a SIM card issued in India is being taken outside of the shores of India, what is stopping a scamster from using a phone which is bought outside? Use the same Indian number, use the same Indian SIM, but not really have this Sanchar Saathi app downloaded on a phone which is bought abroad. And similarly, I mean, what prevents fraudsters from using not a smartphone but a regular feature phone where there is going to be no app installed and use, let's say, just a computer hooked on to any VPN, any Wi-Fi network, and still go ahead and make those scams happen?
So, Karthik, the digital arrest scams, which are basically holding someone on video until they do certain activities, etc., is not possible with a feature phone because feature phones don't have that kind of visual camera and integration. So, I think that is one thing which might get it. But what is the, like, if there are, let's say, 10 million people getting impacted by it, why are we subjecting almost a billion people, over a billion people to this?
Is guilty until
There is
proven
an idea of
innocent.
proportionality here.
It seems everybody seems, in the eyes of the government, everybody is potentially guilty until proven innocent.
Yes, it's not just that. Now you talked about SIM being taken outside the country. Frankly, I mean there are tools that are going by people that scamsters can use to disable or even mislead the Sanchar Saathi app. And SIMs have already been smuggled to Cambodia, Burma. I mean to Cambodia and Myanmar. And if it's an Indian SIM on a device, it can still be used to do the same activity. So there's another regulation that we haven't discussed here today, but that order was also issued on Friday, which says
The WhatsApp order.
For WhatsApp and Telegram and all and many social media apps also have to be bound to a SIM card.
That's right.
Now that creates another level of vulnerability because then that SIM card itself becomes, then it's linked to the device. So if your phone gets stolen, someone can put that SIM in a new device and get access to everything because your account is bound to the SIM and not the device. Currently, if your phone gets stolen, you log in from a new device with a new SIM, you can actually take your account back. But that won't be possible when that happens. When people are traveling abroad, they may not be able to use an international SIM.
Right.
WhatsApp for web is also being disabled there. So there are a lot of these thoughtless regulations which have come out in the last couple of days, in the last week or so, from the Department of Telecommunications that doesn't understand technology. And to my mind, it doesn't even have the legal backing to be able to regulate technology. Ashwini Vaishnaw, when he was telecom minister, said that the Telecom Act will not cover internet companies.
Right.
But now the new, what Mr. Sindhya has done is that he's used the Telecom Act to gain control over regulation of internet companies, and they have no experience in this.
Right.
They're a telecom ministry. They understand mobile operators, right?
Right.
So they're imposing these things without realizing how you and I use the internet, how you and I use these apps. So it is, to my mind, just a complete travesty of regulation that we're seeing. And I haven't seen this number of bad decisions come through from a ministry for a very long time.
Right. So travesty, which is literally being imposed on every citizen. But Kanishk, I really want to understand. Is this something that the government had planned for during the DPDP first phase of consultation and then eventually when it became India's digital protection law? Now, is this something that the government had planned for, and is this something which is going to lead to something more sinister going forward? Because you have access to my phone, there's an unwanted app on my device which I don't know is doing what in the back end. Is this really going to open up a whole new floodgate of chaos which is going to happen in the telecom market?
See, let me clarify. The DPDP rules are being mandated by the Ministry of Electronic Information Technology, which is a different ministry all put together. And the rules which are being made with this app are rolled out by the Department of Telecom. The ministers for both of them are separate, while Ashwini Vaishnaw still presides over Ministry of Electronic Information Technology. We've got Mr. Sindhya, who's presiding over the Department of Telecom.
But this is a digital app.
I'm sorry, I would
But Kanishk, this is a digital app being installed in smartphones which are using data, and data technically then becomes internet driven, right? So overall, my question, my limited question is DPDP giving government the sort of shield to do anything it wants to do with any individual's device and pretty much go scot-free?
See, DPDP would give government certain, ministries, certain departments an exception. Now we need to see whether exception is given to this particular department, which is a digital intelligence unit of Department of Telecom. Will it come under the exemption program? That is something
You want to step in. Does it come under the exemption?
No. I don't think so. It comes under the exception. So that's why let's see how this shapes up, because today we are seeing over-regulation and overlaps with two different ministries coming out with different set of regulations.
This is over-regulation. This is overreach. Nikhil, what is your view?
Can I just come in over
Yes.
here? Let's go back to basics. This is a government that went to the Supreme Court and argued that privacy isn't a fundamental right. That's the basis. They don't believe privacy is a fundamental right. They lost that case. In the Data Protection Act, they've given exemptions to themselves. That Data Protection Act has not been operationalized 9 years after that judgment came out, and every step of the way, they have increased the exemptions for the government. The first version that Justice Sri Krishna had created had restrictions on government. That has been removed in the final version. So they may.
I hear you, Nikhil.
Let me finish.
Yeah.
There is it's a conscious decision by the government. It's not the ministry. Maybe MeitY might be the nodal ministry for it, but we know that all of the security and surveillance is being run by the Ministry of Home Affairs, and that's the most powerful ministry in the government today. So it has directed, literally, I would assume, the MeitY to ensure that the government has exemptions. All of these moves that are being made, we have to look at it as the government as a whole. You can't say this minister is doing this, that minister is not doing it. That's not, they may be separate ministries, but the impact on the user is the same. The impact on our privacy is the same, coming from a government that didn't want a fundamental right to privacy.
Absolutely. So I completely hear you, Nikhil. I hear you, Nikhil. I hear you completely, and I'm in agreement with with the points that you're making here right now. But I just want to understand what next. Now we know that this is an app which is going to be pre-installed on every device. This is an app which is going to be pushed to your devices over the air every time there's a firmware update. And we don't know whether or not this app is going to give access to government beyond cybersecurity, which it claims to do. So as citizens, what do we do and what comes next?
I will tell you what's next. There is, back in 2011, under the UPA government, there was this idea that was floated for NatGrid, which was a database to cover all databases. What it said was, we will get access to public and private databases in order to track users in real time. When Aadhaar was being rolled out, there was an idea of 360-degree visibility on citizens. NatGrid is what brings it all together. It basically, Aadhaar indicates that this Ram Singh is different from that Ram Singh, right? So this is with NatGrid, data from all databases will be available in real time. And the initial plan for MHA was to have, I think, about 200 or 600 public and private databases. Eventual plan was to have about 1900 public and private databases. Today, under the Data Protection Act, the government has given it the right to access private databases about you. So they can go to a Paytm, they can go to even an Amazon India and say,
absolutely,
give us all the transaction history for this person.
Absolutely.
So there is a 360-degree profile platform called NatGrid, which is readying for rollout. And the Home Minister talked about it in Parliament at least in 2019 when I reported on this, right, in much detail about what the plan is. So once that rolls out, all of this will come into play.
Absolutely. So Kanishk, what do citizens do if citizens want to keep their private conversations private, keep their data on their private devices private? Do citizens have a choice?
See, ultimately, you will have to file injunction in the court, right? You will have to appear and basically be in front of the court, whether it is civil society or whether it is through people like Nikhil, who talk about freedom of expression or protecting fundamental right of privacy of individuals. Because today, through this, there is going to be mass surveillance, which is going to be created by government. And the large databases that Nikhil talked about, if those are fused together, it could allow the government to trace personal identifiable information. So by making exception in the DPDP and by creating these new norms and then having data fusion of different databases put together, they would know anything and everything about individuals. And this could be used against individuals as well, right? How do you protect?
Be used for the cyber security and the security, digital security of citizens, or will be used against them is not something that we have an answer to right now. But it seems for sure that the government is going to be resident with the Sanchar Saathi app in your phones, whether you buy a new phone off the shelf or whether you update an existing phone with the new firmware. Well, we are completely out of time, but Nikhil, Pahwa, thank you so much for raising those pertinent questions, and Kanishk for all the expert insights that you've given us. You're mentioning injunction. Well, I don't know how that story is going to unfold and how RTI requests on this particular firmware and the software that goes into making it, the code that went into making it, is going to roll out. But we will, of course, keep an eye on this. Time for a very short break. Coming up on the other side of the break, Mohit Gang will join us to tell us in volatility when markets are flirting with lifetime highs. How does that bode for investors, and what should their strategy really be? We'll be back after a short break.
$25 का हॉस्पिटल बिल है, इतने पैसे कहाँ से आएंगे?
पैसों की चिंता आप मत कीजिए पापा।
मैम, सर का हेल्थ इंश्योरेंस क्लेम अप्रूव हो गया है।
आप
पॉलिसी बाजार
पर 0 GST के साथ अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
Speed, it's relative. The more you speed up, the more the world slows down. And when you are fast enough, everything becomes still. That's when you see the world as it truly is. Servo Hypersport F5, when speed is your default.
पेंटिंग में पहली बार बिरला ओपस अश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
Eastern India's first Business and Economy Literature Fest 2025 on 20th and 21st December at Taj Tal Kutir, Kolkata. EIILM Kolkata presents a Business and Economy Literature Fest 2025. Curation and ideation partner Story Nest.
Back, you're watching News 9. This is Morning Brief at 9. Time to get a mood check on markets this morning. Well, it seems to be a slow start for trade, and this is in fact something that the GIFT Nifty indicators had also told us, that this is going to be a flat start for markets, and markets right now seem to be in some sort of a consolidation phase, especially ahead of the weekly expiry on the Nifty, which is slated every Tuesday, and today happens to be one of those. So as we stand right now, yesterday after Nifty 50 had momentarily touched that new, in fact created that new all-time high at 26,325 before slipping and closing the day flat. Today again we are seeing some sort of a consolidation with Nifty at about 26,150 odd levels. This is, remember, just the first 10 minutes or so into trading, and the meter could move in either direction. Meanwhile, Sensex also, after again touching the 86,065 levels, another all-time high in trade yesterday, is now down to about 85,500 odd levels. A quick look at the Nifty 50 heat map to get a peek into which are the sectors which are giving us some trends this morning. Let's pull up the Nifty 50 heat map, and you see a little bit of correction in the banking BFSI space. ICICI Bank, HDFC Bank, both heavy hitters, down more than 1% or so. Mixed signals coming on the technology front, with Infosys up about 0.6%, TCS down about 0.2% or so. Bharti Airtel, meanwhile, up about 0.8% in trade this morning. This is coming again on the back of Vodafone Idea, which seems to have slipped in trade. And of course, you've got a mixed bag even on the energy stock, with Reliance Industries up, down, in fact, about 0.4%. percentage point, ONGC up about 0.5% or so. Mohit Gang is here to help us understand what should investors really look at in terms of trends, Mohit, because it seems that there are new lifetime highs being created and then markets are back into consolidation phase. What should investors who have been sort of, doing their SIPs, mutual funds, be looking at to understand which way the market is likely to head from here?
Hi, morning Karthik, always a pleasure to be on your show.
Thank you for joining us.
Thank you so much. Honestly, hand on heart, I don't think so there is any trend in the market right now. It's a very, very difficult market to call out for. The fact remains that markets have made a new all-time high, and but that all-time high comes with very weak set of underlying tone, right? So if you see from last September to this new all-time high, basically out of Nifty 500 odd companies, almost like 360, 380 odd companies are in negative, right? So there are very little companies who have actually propelled the Nifty up to this level. And if you see sectoral trends also, there was a short spurt in, let's say, in last 1 year of 1 or 2 months where you saw consumption doing well on the back of GST announcements or tax rate cuts. Then there was a time when defense did well on the back of global uncertainty, and then there was a time when the PSU banks were running, right? But there hasn't been a sustainable long-term trend. There hasn't been a sustainable even style of a market which has actually worked out. It's not that the quality has worked out, or it's not that growth-oriented companies have worked out. I think a lot of money in the market is getting sucked out in the primary issues, and there is very little left for the broader market to actually work in that kind of an environment. So my sense is, I think, look, for retail investors, SIP still continues to be the best bet out there. You continue to put in your daily chunks, regular chunks in the market, because the broader macros are looking stable, which reflects in your GDP numbers, which reflects in your low inflation numbers, and perhaps you will get a rate cut from the RBI as a gift to top it up, right? So I think the overall concoction is pretty well set. It's just that the global FI money has to come in, the currency has to stabilize, and markets have to start putting in some kind of show with some sector actually leading the rally. I saw that in financials, but it has to be more sustainable, right? So my sense is wait and watch for the markets to actually kind of settle at this mark at a new peak, and perhaps look for some sectoral leadership out there. In that meanwhile, just continue building your gradual allocations. It's not the time to actually jump in with a whole lot of money right in the market.
All right, so no lump sum investment at this time. Continue with SIPs. That is likely to see you through. But you're talking about the fundamentals in the economy, which seem to be strong, but the data seems a little confusing, to a layman. So help us understand, Mohit. You're seeing Q2 growth, pretty much, the government and data being, hitting the ball out of the park with 8.2% growth. But then the month after, the October data, IIP is correcting. IIP, in fact, is down about 0.4% or so to a 14-month low. Now add to this, one assumed that there is going to be, of course, some sort of an uptick in auto sales for the month of October when GST cuts first came into being. But what we are seeing is that in the month of November, auto sales again are almost at a lifetime high, and GST collection for the month of November is actually lower, in the lower range of the average, to about 1.7 lakh crore rupees or so. So overall, the data doesn't seem to be aligned. There's no, even in the macroeconomic data, there's no one singular sort of trend line. You're seeing great Q2 numbers, you're seeing weak IIP numbers, you're seeing great auto sales, you're seeing weak GST collections. How does investor make sense of something like this?
Oh, absolutely, Karthik. I think the data is quite confounding, to say the least, honestly. But I think there is some amount of lag effect, because auto sales, typically you are looking at a retail sales number. However, at a distributor level, from a company's perspective, they've kind of front loaded the inventories to the distributors. So there is some lag out there. You cannot really put a trend month on month and say that the numbers would start reflecting every month in a unilateral fashion. Having said which, I think the consumption trend in the economy, because of the two tax cuts, the indirect and the direct tax cuts, should start reflecting effective December, or perhaps from the last quarter of this financial year. That's my sense. If it doesn't reflect then possibly there is no consumption pickup in the economy per se, but I doubt that, right? So we will have to wait and watch. With regards GST, look, I think real GDP, everyone was projecting around 7.5 kind of levels. It's come out at 8.2, which is a shocker of a number. But I think broadly it's understandable kind of a number. I think the problem with the country today is that we're dealing with a very low nominal GDP growth, which I think is kind of derating the entire market multiple, right? The market multiples, the P multiples are a function of what your nominal GDP growth is. And if you're consistently at a very low single digit, a single digit nominal growth number, then the market P multiples will continuously keep unwinding, will keep coming down. And that's the problem. I think the nominal GDP number has to start coming up above 11, 12 kind of numbers for the markets to have a sustainable rally, or for the multiples in the market to sustain, and then for the markets to put a leg up.
That makes sense. Obviously, you are talking about market multiples and the fact that the data is a little confounding, Mohit. But, again, if you look at the GST collection numbers for the month of November, now there are two arguments here. One argument is that consumption overall is not as buoyant as one would have assumed consumption to be. But the other argument is that since the GST rates have only corrected downwards, then the overall collection for the government is, is not adding up to the same averages that one was used to seeing the data earlier. But all those are fundamental economic discussions which we will park maybe for another day. Right now, I want to go back to something you'd mentioned earlier when you started speaking about investors choosing certain specific themes potentially, because it seems that at a time like this, your SIPs or even any extra cash that you have, putting it in passive investing tools, looking only at index investing, may continue to be volatile. But if you were to sort of advise investors on keeping an eye on certain themes, certain sectors, what in your mind are those sectors which over the next 1 year, over the next 3 years are likely to give them decent dividends?
Okay, Karthik, I think that's a difficult one, but I still continue to believe that you can play the consumption story. My sense is I think gradually the numbers will start reflecting in the broader economy, because there's been a massive bonanza in way of direct and indirect tax cuts, and it cannot happen that the numbers go amiss, right? So somewhere that spending has to come through. So that's number one. I think financials are looking extremely attractive from a valuation perspective, and the sector per se has shown some kind of leadership. If you see the broader banking index, right? And I think for last 1 month on, when markets have shown some kind of strength, I think banking has led it all the way. So my sense is financials, I think I continue to remain bullish, though by virtue of it being an overweight sector on the index itself, I think broadly anything which you buy by virtue of a fund will always have banking as the largest component. But yes, if you want to play a sectoral theme, then I think banking continues to be one. Other than that, honestly, there has been telltale signs, but not a very convincing story for someone who's looking at a very long-term view. Let's say who's convinced with a 1.5, 2 year kind of a horizon. A contra bat could be IT right now, or even pharma for that matter. But again, there has to be some more concrete signs for these two sectors to start reflecting in the overall numbers. But as of now, I think banking or financial services, the broader financial services, including capital markets, including NBFCs, I think that's the play I'm more bullish on.
All right, Mohit gang, let's leave it at that. And thank you so much for your input. Of course, you're saying that it is primarily the banking and the finance stocks that one should be cognizant of and potentially buy on dips, I think would be the strategy. But we will leave it at that. Thank you so much, Mohit, for your time this morning. And moving on now, India's passenger vehicle market recorded strong momentum in the month of November, with domestic wholesales touching 4.25 lakh units, a sharp 20.7 year-on-year jump, 20.7%. That's almost 21% jump over the last 1 year. Now, the surge comes on the back of strong demand and the recent GST rationalization, which has reduced prices for several models. Automakers say the market remains extremely bullish, with some companies reporting that several popular models are completely sold out at the factory level. Now, dealer inventories currently stand at around 80,000 units, with another 40,000 units in transit, reflecting the continued pressure or supply. Now, the country's largest car maker, Maruti Suzuki, posted a 21% rise in wholesales to above 170,000 units, and production teams are working overtime to meet December demand as well. Industry data also shows that Tata Motors retained the second position in November with almost 57,450 odd units, up 22%, while Mahindra & Mahindra reported almost a 22% growth with 56,336 units. Meanwhile, Hyundai's domestic wholesale rose just 4.3% to 50,340 units, supported by stronger festive demand and GST 2.0 reforms. Toyota Motors saw 19.5% increase, dispatching over 30,000 units in the month of November, helped by sustained demand for its recently updated models. Overall, November marked another month of broad-based strength for India's auto sector, driven by festive sentiment, tax rationalization, and a renewed push in production and exports. And with that, we will slip into another short break. But before that, some of the global stories that we are tracking for you. Here are some of them. U.S. Special Envoy Steve Witkoff all set to meet Russian President Vladimir Putin on Tuesday as Washington pushes its controversial proposal to end the Ukraine war, a plan critics say risks major concessions to Moscow. United States exempts British medicines from import duties after London agrees to boost spending on American pharmaceuticals by 25%, a rare tariff carve-out amid sweeping U.S. trade actions. U.S. President Donald Trump summons top national security officials as fears rise over potential military action, while Venezuela's Nicolas Maduro dismisses Washington's latest peace offer. The European Union signs new defence agreement with Canada, grants Ottawa entry into a massive 150 billion euros worth of European defence fund as global security threats surge. European Union's top diplomat Kaja Kallas says any Russia-Ukraine peace deal must protect Ukraine's sovereignty and Europe's security, pushing back against proposals seen as being soft on Moscow. UK Prime Minister Keir Starmer flags growing security threats from China, yet defends deeper trade engagement, arguing Britain must stay economically competitive. Manufacturing activity weakens across Europe and Asia in November, underscoring the strain on exports as trade tensions and weak orders bite. Tesla sales continue to plunge in key EU markets despite launch of new Model Y, extending a months-long slump for Elon Musk's EV giant in Europe. And Netflix offers to acquire the debt-burdened studio behind HBO and Warner Brothers, a move that could radically reshape the US media landscape and potentially even the global media consumption landscape. We'll get you these stories after the break. You're watching Morning Brief at 9.
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो। तू भी ले ले।
अबे जल्दी क्या है, बाद में देख लेंगे।
आराम से अब तक कुणाल को हार्ट अटैक आ गया यार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders shaping tomorrow. Watch them take an iconic leap at Visionaries of Viksit Bharat conclaves. Exclusively on News 9.
यही मौका है बिजनेस को बढ़ाने का, पर पैसा।
अपनी सुपर पावर यूज करने का टाइम आ गया है।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
आपके जैसे सुपर हीरोज ऐसी छोटी मोटी प्रॉब्लम से थोड़ी ना रुकते हैं, इसीलिए लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
Ever wondered what makes the night come alive? Where flavors, lights and laughter dance in harmony. When the sun sets, stories rise. Of kitchens, cocktails and charisma. What makes your city's night so happening? Let's find out.
good service, good food, and a good location.
You need to explore, you need to experiment.
But they will never forget how they felt when they came to your restaurant.
Being a chef, it's my priority to deliver taste in a plate with good presentation, unique innovation.
My definition of mixology would be to get people drunk in a safe and happy way. Don't drink on the job, that's for sure.
Mixology, you can play around with anything. You can create the stories, you can create the recipes.
Let's cheers on that note with our friendship.
Indulge in the finer things in life with Radico presents Lounge Nights. Discover the creme de la creme of India's culinary and nightlife scene. From trendy bars to exquisite restaurants, we've got you covered.
Watching News 9, this is Morning Brief at 9. Well, UK seem to have swallowed that bitter pill on finding a way out of US imposed tariffs by making certain purchase decisions and commitments on pharmaceuticals. That's right, the US and UK have struck a pharmaceutical trade deal eliminating US import tariffs on British-made medical products for at least 3 years. In return, the United Kingdom will boost spending on new treatments across the National Health Service by roughly 25%. It marks the largest boost in NHS investment in innovative treatments in more than 2 decades. The Trump administration framed the pact as an economic win as well. Officials said UK drug companies had committed to expand investment and create jobs in the US as part of the arrangement. Well, streaming giant Netflix has reportedly made a cash offer to buy TV and film group Warner Brothers Discovery as the debt-laden Hollywood studio presses on with a sale that could remake the US media landscape. According to Bloomberg, the parent company of HBO, CNN and the Warner Brothers Film Studio officially put itself up for sale in October. Netflix, the world's largest streaming service with over 280 million paying subscribers globally, is working on a bridge loan totaling tens of billions of dollars to finance its potential acquisition. Now, the deal would bulk up Netflix's already considerable content production capabilities and secure premium assets like HBO and Warner Brothers Studios. And US online shoppers are expected to have spent more than $14 billion this Cyber Monday, traditionally seen as the country's biggest online shopping day and marks the culmination of the Thanksgiving shopping weekend, boosted by AI-powered shopping tools. Take a look.
U.S. consumers are expected to spend more than $14 billion on Cyber Monday, building on strong Black Friday momentum. That's according to Adobe Analytics, which said AI-powered shopping tools should help boost Cyber Monday sales by 6.3% from a year earlier. Adobe Analytics tracks 1 trillion visits by shoppers to online retail websites. Cyber Monday is traditionally seen as the country's biggest online shopping day and marks the culmination of the Thanksgiving shopping weekend. Black Friday kicked off the weekend with a record $11.8 billion in online sales, according to Adobe, as consumers switched to chatbots to compare prices amid concerns about tariff-driven price hikes. U.S. retailers have also doubled down on AI tools to lure shoppers. Adobe expects AI-driven traffic to retail sites to rise by 670% compared to last year, when AI tools like Walmart's Sparky or Amazon's Rufus had not yet been launched.
Moving on now, UK Prime Minister Keir Starmer warned on Monday that China poses national security threats but defended deeper economic engagement, saying stronger business ties remain in Britain's interest. In one of his clearest attempts to explain his approach to China, Starmer said in a speech to business leaders in London that Britain's relationship with China had for too long blown hot and cold. Listen in.
For years, the narrative ran that China was the coming power. Well, now it has arrived, and the UK needs a China policy that recognises this reality. But instead, for years, we've blown hot and cold. We had the golden age of relations under David Cameron and George Osborne, which then flipped to the ice age that some still advocate. The result is that whilst our allies have developed a more sophisticated approach, the UK has become an outlier.
EU Foreign Policy Chief Kaja Kallas has yet again warned against pressuring Ukraine into territorial concessions as per any US brokered plan, saying any peace deal between Russia and Ukraine must protect both Kyiv's sovereignty as well as Europe's security interests. Listen in.
Yes, I'm afraid that, all the pressure will be put on the weaker side, because that is the easier way to stop this war when Ukraine surrenders. But this is not in anybody's interest, not in the interest of Ukraine, not in the interest of European Union, also not in the interest of the global overall security, because it's the United Nations Charter that says that you can't change borders by force. If this pays off, we will see this elsewhere.
All right, and manufacturing activity weakened across Europe and top Asian economies in November as soft demand and tariff uncertainty continued to weigh on factories. But there were bright spots for Britain and some economies in South Asia. Take a look.
Manufacturing was weak in Europe and Asia's biggest economies in November. That's according to key business surveys released Monday. Analysts blamed lower domestic demand and tariff uncertainties. The closely watched Purchasing Managers' Index, or PMI, showed manufacturing activity contracted in the Eurozone, China and Japan last month. But there were bright spots for Britain and some economies in Southeast Asia which saw growth. Eurozone manufacturing activity slipped back into contraction. Germany's dominant manufacturing sector saw a clear fall in business conditions and new orders dropped at the fastest rate in 10 months. Meanwhile, French manufacturing contracted further in November as a drop in production and slower demand for goods hit the sector. While Britain had its first rise in activity since September last year, it saw improved domestic demand and less of a slowdown in orders from overseas. A PMI showed factory activity slipped back into a slight contraction in China. The number was released a day after Beijing's official measure showed activity falling for the 8th consecutive month. Asia's other manufacturing powerhouses also struggled with sluggish demand in November. Progress in US trade negotiations didn't lead to a significant recovery in orders for the region. Japan's PMI showed new orders continued to decline, stretching the downturn to 2.5 years, while South Korea's factory activity also contracted for a second month in November.
And on to India. Now, India's own industrial engine slowed sharply in the month of October. New data from the National Statistics Office shows industrial production growth falling to 0.4%, a 14-month low compared to an upwardly revised 4.6% in the month of September. Now, the last time the index of industrial production, or IIP, was this weak was back in August last year. On a year-on-year basis, IIP had grown 3.7% in October 2024, and growth between April and October this year averaged just 2.7%, notably lower than 4% during the same period last year. The October slowdown was driven by fewer working days and a steep fall in electricity generation. Manufacturing, which makes up nearly 78% of the IIP, grew 1.8%, sharply lower than September's 5.6%. Mining too shrank for the second straight month, contracting 1.8%, while power generation plunged as much as almost 7%, partly because of the extended monsoon and cooler temperatures across many states. Out of the 23 industry groups, 14 sectors including food products, apparel, textiles, leather and pharmaceuticals saw contractions in October. Only 9 sectors managed to grow, led by basic metals at 6.6%, petroleum products at 6.2% and motor vehicles and trailers at 5.8%. And from motor vehicles productions falling in India to those falling in Europe for the Elon Musk-driven EV maker Tesla. Tesla registrations in France and Denmark fell by roughly half in November as the Elon Musk-owned EV maker continues to lose market share in Europe despite launching an updated Model Y. More details in this report.
Tesla's troubles in Europe dragged on through November, data has shown. Although there was one big bright spot in Norway. Monthly new car registrations are seen as an indicator for sales. Data released Monday showed monthly registrations were down 58% in France from a year ago. They were also down close to half in Denmark and 59% from a year earlier in Sweden. The electric vehicle maker has struggled to turn around market share losses in Europe. That's despite launching a new range of its best-selling Model Y. Tesla's slowdown in Europe began late last year when CEO Elon Musk praised right-wing political figures which set off protests across the region. Musk has gone relatively quiet on politics in recent months, but Tesla's European business hasn't recovered. Analysts further cited growing competition in European markets, especially from new Chinese entrants. They also blamed Tesla's ageing lineup. There was a bright spot in Europe though, as the EV maker sold more cars in Norway this year than any other automaker ever did in a full year. It beat the country's annual sales record with 1 month to spare, with sales up more than a third in the country.
And with that, we come to an end of this edition of Morning Brief at 9. If you have been, thank you so much for watching. But news continues right here on News 9, so do stay tuned.
This is India's #1 news network, and you're watching News 9.